What's up, trader? It's Mark. In today's video, I'm going to cover a couple things. The first one being stochastic and how a lot of people are using it incorrectly, and the second one being market structure and how you can use stochastic in combination with market structure to increase your odds in trading. And gang, just so you know, this is just an introductory video. I'm going to do an entire series on market structure. So I hope y'all enjoy this introduction to it, and if you have suggestions on things that can be added, don't hesitate to say so. But this is just kind of scratching the surface, so to speak. And if you're interested in the remaining parts of the training, which is going to be completely free, but you have to get yourself signed up on the email list at the website. And I'm going to post the link here in the video as well as in the description. So you got to go there to get yourself signed up on the website in order to get the free training once it's available. All right, let's get started here. A lot of us use stochastic to measure if a stock or instrument, whatever it is that you're trading, is overbought, meaning that it's above this top line, which represents 80, or if it's oversold, meaning that it's below this 20 line down here. Well, that is a correct way to use stochastic, but here's the issue. A lot of people have a tendency to want to trade against the trend. And in my experience, I have found that there's a direct correlation between trading against the trend and the account balance in my account going down. So I just quit doing it. I much prefer to be with the trend because that is where you're going to make your money. Now, why is stochastic used incorrectly so often? Well, it's because people just come into this business and they believe they can just throw this thing on their charts, and they have a tendency to see this thing above 80 and believe that they should be shorting because it's overbought. Well, I want to show you guys a correct way to use it that may help you guys out in your trading. All right, so first, before we get started, we have to understand what stochastic is. Well, it's measuring the range of your bar, so the high to low range, and then it's also measuring the close of the bar to the low. And so if we look at this bar, you can see that stochastic at the close of this bar went from here all the way down to here, because this bar is showing downward momentum. The close is right near the low, whereas this bar went from here up to here, showing upward momentum. Now, in my opinion, to me, by itself, this all means nothing. You have to learn how to combine a handful of things so that you can apply this and increase your edge in trading. Because at the end of the day, that's what we want to do, right? We want to learn how to increase our edge in the markets. And then we want to be able to take that edge and we want to be able to repeat it over and over and over again, much like a casino does with blackjack. They have an edge and they just repeat it. They do the same thing over and over and over again. You have to start thinking like the house. Don't think like the gambler, think like the house. All right, so let me just show you guys what I use for my stochastic. I use a 1 for my period D, 14 for my period K, and the smooth I use a 1. So the reason I use a 1 for period D is because all period D is, it's just the moving average of period K. And I don't need to see it. Okay, I don't care about the two crossing. That doesn't mean anything to me. And 14 is just the look back period. How many bars am I looking back? Well, I'm going to look back 14 bars. Okay, if I want to smooth out stochastic to where it's not as erratic, I can increase this. If I want it to be a little more crazy, I can decrease this. Okay, this is what I use. Now, I have found several applications of this, and we're going to talk about just a couple here today. And I'm not going to go into a bunch of detail, but I just want to give you all an idea of different things that I like to use stochastic for. So let's talk about market structure a little bit. Just a little bit, all right? I'm going to do an entire training on market structure, and this is just brushing the surface. If we look back at this move right here, all of this here on the chart, how would you have entered this move? Well, we know if we look left that the trend is up. We also can see if we tried to short this instrument, this is the S&P 500 futures, if we tried to short this just because stochastic was overbought, we would have gotten our faces ripped off. See, here we are overbought. Here we are overbought. Here we are overbought, and it continues higher. Okay? Here we are overbought. You get a little move, but your move is this way. It doesn't continue this way. Y'all get my point? Now here's the only time that stochastic comes to be oversold, right in this area. But again, for me to be able to take this trade, where would I have entered? How would I have entered here? All right. So if we now start looking at market structure, in my opinion, the only place that you have any decent market structure all through here is this area right here. Now, why do I pinpoint this area? Well, to me, this is actually a kind of a weak area, and not one that I would trade, but it's where my eye goes because there is a consolidation of price here. And because there was a consolidation of price, and then you got this nice move back with the trend, that tells me that our buyers are still in control. You had buyers stepping in back here, but unfortunately price never came back to this area. It got close, but it never made it. And then we have an area of just consolidation for, an hour and a half, and then here we go, buyers step back in and boom. And look what happens immediately. They come back and they test. And they try to move higher. Then they test again, and then you get your move. Okay? Now this right here is not a bad move. This one I still would have taken, and I probably would have been stopped out on and then re-entered. But there was something that happened prior to this that really set the tone for the day. Well, this isn't it, okay? But I want to point this area out too. This is a very similar area to here, right? These are things that I look for when I look at market structure. But what's the problem with this? Well, the problem is it can be a little subjective, meaning that none of these are going to look the same, right? And so there's going to be a little bit of subjectivity to it. And how do I test subjectivity? Well, it becomes a little difficult. All right, so I want to move back to this area. Okay, a handful of things happen here. Now, if you notice, gang, this entire day, here, I'm going to scrunch the chart up. This entire day had consolidation, push up, retest, consolidation, push up, no retest, close, consolidation, push up, retest, retest, and then up. Okay, this is, on a trending day, this is what you're going to see. Now, but there's one thing in here that happened that I personally take note of. And it's right here. And if you see, gang, this is where your big move came from. Now, is it a coincidence? Maybe. But who cares, right? Because if you're trading this day, this is the only move that I would have needed to be able to make my money. Just one, right? Now, why do I care about this spot right here? I'll show you why. So we have our move higher right here. We have a retracement. And inside this retracement, what I'm looking for is I'm looking for your down red bar. And then at that point, I'm going to measure, in my mind, I'm looking at the high of the move, which is right there, and the close of that first down red bar. So in my mind, I'm kind of boxing those in. From here, what I want to see is I want to see a close below the low of that first down red bar. Now, it doesn't have to happen immediately after the first down red bar. But once I get a close below that first down red bar, then what I want to see is a close above the high of the move, which happens right here. So once this happens, this is now my area. I take the high down to the low, and this is my trading zone. Okay? And you can see how they came in, they tested it, they tested it, they tested it, they tested it, and then finally we go higher. This, for me, is where I use stochastic. Okay? I want stochastic to be oversold, but maintaining my buy zone, which for me is showing market structure to the long side, giving me a trend to be bullish, right? So I've got a bullish trend. I'm at a buy zone. If I can get my stochastic to be oversold, I want to start looking to be a buyer. It happens right here. It happens right here. And then again right here. So how would I trade this? Well, we all have different trading styles. One thing that I like to do is I like to kind of nibble a little bit. So I want to risk a little to make a lot. And so in this case, I would have taken a trade right here. I would have been stopped out right here. Wait, actually that may not be true. This is a really, really small bar. 64.75. So what I do is I just enter one tick above the high of either one of my 4 bar types or a green up candle once I have my stochastic oversold. So this would be 27.65, and I would use a 2-point stop. So I actually would not have been stopped out on any of those moves. That's interesting. I thought for sure there would be a stop out there. No, so there's not. So my entry would be 27.65. My stop is going to be down here at 27.63. So I just would have had the one trade. So I'm going to be risking 2 to make 10. I want a 1 to 5 risk reward out of these areas. And you can see it took some time because my entry was going to be all the way at 8 o'clock. Target's not hit till right around lunchtime, right? So I'm in this trade for about 4 hours. How many of you have the patience to be in a trade for 4 hours? You have to get to this point. You don't want to babysit your trade, all right? Okay, so this again, it's just a brief lesson on some of the things that I look for, and I want to do a full lesson on market structure and just the different ways that you can identify it. Because guys, think about it. How are you currently trading? Are you using stochastic? Are you using market structure? If you're using market structure, do you have a way to objectively define market structure, right? If we go back and we look at this chart, what do you do on a day like this? Right? I mean, it's a little messy, right? And so what do? Well, if we look for that little pattern that I just showed you, you've got it right. You have one right here to the downside, right? So if we go ahead and we box this area in, look what happens. Here's where my stochastic becomes oversold. I'm sorry, overbought. Right here. So this is where I'd want to enter the trade. Right? And look, there you go. You got your 10-point move. Anyway, gang, I hope you enjoyed this. There'll be more coming. This is all I had time for this morning. So I hope you all have a great weekend.